Welcome back to another one. Today we're going to talk about a change in state of delivery. A change in the state of delivery is actually just a shift from one type of price delivery to another. That is, maybe you're having price coming from buy side delivery to and then switching to sell side delivery, or vice versa. Or you could also say that a change in state of delivery is just a transition in the market's direction. So basically, this is a reversal concept. Okay, we use this, um, and it's actually much more useful than reversal patterns when it comes to confirmation of reversals and the frequency of the kind of setups that you get from applying this concept right over here. So, as we said about reversals, so when price is bullish, eventually it's gonna hit a key level, and then we'll see a reversal from there. Or when it's bearish and it hits a key level, and we have a reversal from there. So, with a change in state of delivery, what happens is once price hits the key level there, that is what's going to be a confirmation for you that price has reversed, right? And yeah, as for bullish reversal, same thing as well. Once we hit the key level, we're going to see a change in state delivery, and that's going to be a confirmation of a reversal in price. Now, a change in the state of delivery is actually quite synonymous with order blocks. And the reason why is because an order block is actually a key area where a change in the state of delivery can occur. You see, they are related in that way, and even the way that they are shown on the charts is quite similar. They are actually one and the same. They're usually at the same level. And so I'll show you with this ones right here. So what is a bullish change in state of delivery? So when price comes in, here's a key level. When we have a close above a series of down close candles, the opening of the series of down close candlesticks right here, once price closes above the opening price, that's a bullish change in state of delivery. Or if it's a single candlestick right over there, once we close above the opening price of that down candlestick, we have a bullish change in state of delivery. Hence, we can start to look to be bullish. Then, for a bearish change in state of delivery, once we hit a key level, we want to see price closing below a series of up candlesticks, the opening price of that. Once it closes below, then we have a bearish change in state of delivery, and we can start to seek lower prices. Yeah, even if it's a single candlestick right over there, once we close below it right over there, we have a bearish change in state of delivery, and therefore we can start to look for sell positions. So right now we're gonna do some review of some trades that I took, and you're gonna see how this concept can be applied all the way to execution, right? First thing, the first trade actually we're gonna look at this point in time on price, retrace down to a H4 order block and expanded from that. So we're gonna look at that trade as well. So basically, the first step always we're gonna be looking at price trading to a key level. So we have a key level that we're interested in seeing a reversal occur or at. Then when price reaches that key level, you look for an hourly or a 15-minute change in state of delivery. Now, in this particular case, we had a 15-minute change in state of delivery, and well, once we close above the opening price of that series of down close candlesticks, then we have a confirmation of a reversal. We can start to be bullish. 15-minute time frame is actually my execution time frame, so I execute primarily in the 15-minute time frame, and I'll show you how I use the H1 and 15-minute time frame when I use them together. So in this particular time here, when we had that confirmation with that bullish change in state of delivery, then I executed my buy trade right over there. So the next setup is this time here, right? We just reviewed this one here, the buy trade over here. So we're going back, starting with the latest one, going back to previous ones. after price to got a significant liquidity pool, which is previously high. You see what happened, right? Price sold for a bit over there. So we see how we could have come to that. We could have executed a trade, a sell trade after that. But before that, you might be wondering why my high time frame key level is actually you're going to be seeing a lot of H4 charts right here as my high time frames. This is because at that point in time, that I took all those trades, price was actually consolidating on the daily time frame. If you go and look at it, you'll see that there was price was just consolidating. It wasn't really moving that much on the daily, or nothing interesting about price right over there with regards to key levels. But when you see to a lower time frame, it's a whole different thing, like this one here in the H4. And which brings me to a point about something that I mentioned in the Telegram channel before, and I'm going to mention right here about consolidations. I did say just recently, I said you should be trading consolidations, but before that I also said that I said some statement right here. Maybe I'll give some lights on it right now about a high time frame consolidation is actually lower time frame structure, and a lower time frame consolidation is actually high time frame structure. Now, we're not really going to get into this, but basically, what it means is that if you have a consolidation of the higher time frames, then on the lower time frames is going to be some clear price structure. And if we have a consolidation on the lower time frames, when you switch to higher time frames, you're going to see some clear price structure. No consolidation at all. This is what I use, okay, to actually, navigate around consolidations, because some people might believe that are non-tradable and all those things, but the confusion around if price is not moving much, like sometimes you want to stay on the sidelines, but then you have to prepare yourself for what's going to happen next, what's going to come next. Usually after a consolidation is an expansion, and you have to prepare yourself for that expansion. Where is price going to expand to next? Well, this is what you're going to do. You're going to avoid the consolidation entirely and go where there's clear price structure, and then price will reveal to you, you know, as it progresses. Right, back to the review on this here. So first thing first, we want to hit a key level, previous weekly high, then an hourly change the state of delivery. We have it right here when we close below that H1 order block. Then you go into the 50-minute time frame, and that's my execution time frame. So I don't go lower than that. So on M15, you want to see price structure, and you want to see an entry model of your choosing that you're comfortable with, and to take your sell position in. Remember that the changes their delivery on the hourly time frame has been confirmed right over here, right? And on the M15, what we have is we're actually seeing that after price took out the previous weekly high, or we have a failure swing over there, then it closed below, so we have a mitigation block, and this is where you would have or should have taken your sell position at. And when you choose back to an H4 time frame, you see this is where the H1 change the state of delivery is, and this is where the execution on the M15 mitigation block would have been at the high of that H4 candlestick right over there, right? And that's actually one of the trades that I was part of. And of course, I use a different model altogether to take my entry as high as possible, or as close as possible to the high. Then to the next one. This one was actually rather interesting, right? Let me quickly go through this. Now, still, price is still consolidating, and I think even on this H4, I did you know I did post some things on the Telegram channel about what was happening during the time and all those things. So the key level, we have bust liquidity. Even on the daily, is just the swing high over there, right? So we shipped that high, and then you look for an hourly change state of delivery. You get it right there. Once we close below that up candlestick right over there, we have a bearish change in state of delivery. You can start to seek sell positions or sell setups. And so what happens is we see price refusing back up, to premium of that range. And so on the M15, uh, was quite a challenge. Probably this one would have required some a bit of experience. Some seasoned traders would have, um, you know, would have fared much better at finding a sell position at this point. So remember again that distance is just interchangeable, synonymous with order blocks, right? So this is not just the change in state of delivery here, but that candlestick right there is our bearish order block as well. So on the hourly time frame, it's the key level that you could see price, once it hits that key level, you see a reaction, some type of reaction, and you can basically use the same principle by applying in H1, that H1 order block as your key level, and then on the M15 you might look for a bearish change state delivery once again at the same place. Okay, but at the time, right? Remember that I switched 1 hour to M15. You might be noticing that there's three up candlesticks here. Might be your bearish change state, your change state of delivery over there, and there's not a breaker block. Yeah, a breaker block as well. So anticipation, I I was kind of expecting, or I figured price might reach up to that high, to that area there, that level, either the breaker block or whatever, or the the M15 changes state of delivery. So, but I knew this other block level right over there, the open price of it. We could also see a reaction because it's an order block, it's an H1 order block. You see a reaction. I was also ready for that. Now, price did indeed respect that order block level on the H1 time frame, and how you see that is the way that price. The reason why I also marked out that 50 gap. You see how price, the bodies of the candlesticks remained within the 50 gap, because the wicks do the damage, the bodies tell the story. So that is a confirmation for you. This is what price is telling us right now, with the benefit of hindsight, that indeed it's respecting that level because it's staying within that, you know, and it's not going higher. Now I did see that happening, and I did take a sub position actually, but I was also, um, I wasn't really that confident in taking my sub position right over there because the price might still go higher, and I did not want to risk quite a lot, but put my stop all the way up to the highs. So because um my stop was tight, this is what happened. See, took my sell position, got stopped out, and even when I saw an M15 change in state of delivery after returning on that H1 order block, took a sell position, my stop was still tight, and that price left me. That's to the right, yeah. So that's about it for volatility 75, and um all the all the so not really all of them, but some of the trades that I took. Now, as a bonus one, I'm going to show you this one here on volatility 75, because I have not shown you some uh a trade, or all those ones, they do not have high time frames. The highest that could go was H4. So I want to show you something which actually has a high time frame, like this one on the daily. And this is actually one of a position that I took myself as well. You see, so the key level here is that price reaches above that swing high over there. So we have past that liquidity being swapped, and you also have that bearish, fair value gap as well here. So price is going to expand then to sell side liquidity from there. And of course, you follow the same process. You see price hitting the key level, and then you look for an hourly change in state of delivery. You get that as well. Now, to close this off, I'm gonna have to let you know that remember again, I have to reiterate that this the change in state of delivery is a reversal concept, right? We use it for primarily the confirmation of a shift in price delivery. Therefore, you can expect it, even in this one here, right over there, that price is going to shift from buy side delivery to sell side delivery, which means price order flow is going to be, bullish order flow to bearish order flow, and that means that there's PDRAs are going to be respected now, as you see in price. So, just to close this off, the last bit, you can still use the same process that we've been using. So every time price comes to X on that, um, see this is the bearish order block. You look for the M15 changes to delivery, you execute or this delivery gap over there, M15 changes state of delivery, you execute your sell trade, and on and on and on. Now, as always, this is something for you to backtest until you drop. And I hope this was insightful. Until the next one, cheers.